few housekeeping notes here. Our webinar is scheduled to run for 50 minutes with an additional 10 minutes for Q&A at the end. All attendees will receive a link to a recording and the slides within a couple of days, but we're also uploading the PowerPoint to the WebEx software, so you can download it right from this webinar. Throughout the discussion, we do encourage you to type your questions into the Q&A panel at the right of your screen. And I'd like to take this opportunity to let you know that a short survey will launch at the conclusion of the webinar. Your input is important to us, and we'd appreciate your feedback. Everybody who completes the survey will be entered into a drawing where we will give away two $50 Visa gift cards to 2 different people. So with that, I think we are ready to get going. And my co-presenters today are Colleen Clarke and Patrice Lafayette. So we are excited to move forward and go on to the next slide. Patrice? Oh, Patrice, you are muted.
Unmuted now. Thank you.
There you go.
All right. Good morning or afternoon for some of you, and thank you for joining us today. We're just going to go through a few of these first slides kind of quickly, as most of you already know what customs bonds are. The U.S. Customs surety bond system is essential to the success of customs commercial operations. It has been held out to the world as the gold standard whereby customs authorities may immediately release goods to meet the needs of commerce while separating and postponing final decision-making on revenue, non-revenue, and admissibility issues. They are governed by CBP through the regulation under the 19 CFR 113. So, as simple as this slide may sound, many get confused on what is a CBP bond. There are thousands of different surety bonds out there, but the CBP bond is unique to customs. Many also confuse the surety bonds with insurance, and although they are regulated by a similar matter to what insurance is regulated by the states, they're also very different. To start, a surety bond has 3 parties to the contract. In the case of a CBP bond, there's a principal or the importer, the obligee or customs, and then the surety, who is the party guaranteeing the protection of the obligee. With CBP bonds, they are a financial guarantee that protects the revenue of the United States. It guarantees payment of lawful duties, taxes, and fees owed on imported goods, as well as any additional duties due to the government. It also guarantees payment of liquidated damages. A CBP bond is required by U.S. Customs to participate in the customs commercial process and also to make entry into the United States.
All right, so let's move on to Colleen's favorite thing. We cannot have Colleen on a presentation about customs bonds without some updated statistics. So Colleen, why don't you take it away?
Thank you, Jennifer. Can you hear me? I trust you can. Excellent. Okay. So thank you, everyone, for joining us today. We're happy to present, as always, on customs bonds. It's kind of our thing. But in order to really understand what the exposure is to a surety, you really have to understand the trade statistics that Customs puts out. As you can see here, we took these numbers from Customs, their website, where they post all of their statistics. So based on the bond amount of continuous bond amount being 10% of the total duties, taxes, and fees paid in the previous 12 months, the bond is only 10%, right? So Customs actually retains 90% risk. So if you think about it that way, all these duties, taxes, and fees are only covered up to 10% by the bond. The importer is responsible to pay the full amount over and above the bond amount because it's lawfully owed revenue. But I mean, put that into perspective that these bonds are only 10%, a continuous bond is only 10%. So every single import bond is always fully exposed to the bond amount. And then looking at the past 5 years, you can see how the import value has pretty much stayed about the same, pretty stagnant. Same thing with total number of entries that were made annually. There was a little lull in 2020 because of, all of the issues with the pandemic. But it kind of regained back again in 21. So it's been pretty stagnant there too. But then you look at the total duties, taxes and fees collected. Look at this huge jump. You went from 35 billion to 93.7 billion in 21. And why, you may ask? Well, we all know what the trade remedy measures were, right? Initially called the Trump tariffs, but they've continued on, since the new administration has taken over. Looking at the previous assessments and what they are, Section 201 is essentially anti-dumping and countervailing duty. We saw that there was an issue where the U.S. Trade Rep reviewed it and showed that there was some unfair dumping, an increase of imports that were affecting the U.S. industry for washing machines and solar panels. So that was instituted back in early 2018. Then we had the 232 duty assessments for aluminum and steel. Now that the one for the EU has been settled, and now that is those tariffs have been eliminated as of January 1st, but there is a tariff rate quota. So they can only imports up to a certain amount can be brought in of aluminum and steel from the EU. And then we have 301s, which are still in effect, and those started back in the middle of 18, adding, in 2019 going forward, and they're continuing today.
Hey, Colleen, real quick question before we hop to the next slide. Can you claim drawback on the different section 201, 232, 301 duty assessments?
The answer is yes and no. For Section 201 and 301, yes, drawback may be claimed, but on Section 232, no, there's no drawback allowed.
So bond counts, we've got the latest stats from Customs Revenue Division as of the end of 2001. And one of the things we wanted to point out right there with the big arrow is that the $50,000 continuous import bond, that's the minimum bond amount that Customs will accept for a continuous import bond. And that number is going down. So like it says there, historically, 95% of all continuous import bonds have been $50,000. So we're seeing that decrease, which makes sense after you've seen those stats that Colleen presented. Oh, one more thing too is to point out the liability amount there down at the bottom, 24 billion. That is just for the face value of the bond, but typically a continuous import bond, once it renews, that is now doubled, right, for the liability, because you've got all those entries under that bond that typically have a liquidation cycle of 314 days. So most likely you've got liability under all of those bonds, and once they renew, now we're talking close to $50 billion in import bonds.
Yeah, and that's for all sureties, and there's not very many custom sureties out there. So if you think about that, it's $50 billion, with maybe 6 or 7 sureties that write these bonds.
All right, so the next slide here, we want to talk about the insufficiency notices. We get these stats as well from Customs, and you can see here we go from, if I go from the right to the left, we've got 2021, and then we go back a couple of years. So last year there was a total of 9,600 insufficiency notices. And we also wanted to show you how much in the bond amount that affected. And we're talking, that's a little tiny, but $646 million worth of bond amount last year. So even through the pandemic, we've still got a lot of increased bond amounts.
Yeah, so we just went over the historical insufficiencies, which I'm sure everyone on this call has had to deal with at least one. And now we're going to go over calculating the bond amount, as well as the challenges that we've seen with these calculations in the most recent years. The bond is calculated at 10% of the total duties, taxes, and fees for the last 12 months. But it's now highly recommended with the changes in tariffs and the increase in imports in general that you also look at the future 12 months to estimate your bond calculation appropriately. It's very important to remember that these numbers are not based on the effective date of the bond, but on a rolling 12 months with CBP reviewing them on a monthly basis. We have a tool on our website that we have the link to here on this slide for you to utilize in helping determine the correct bond amounts for your importers. We also do run our own saturation reports that can be sent to you on bonds written with our surety companies that you write with us to help anticipate when a bond is almost 100% saturation, which usually will then turn into a CBP mandated increase letter following pretty shortly. Also, don't forget that this is part of informed compliance for an importer. The other key thing here to take away is not to sit on any potential insufficiencies or any CBP demands. And I'm going to pass it to Jennifer, who's going to share some more information on this.
Yeah, so just a few things. Yeah, our saturation alert, Rono conducts a review of all of its active continuous import bonds on a weekly basis. And usually what we typically do is at 90% saturation, we will trigger a notice to send out to our customer to say, hey, you may want to look at this, see if possibly an increase needs to happen on your time rather than on customs time. And then we'll send a second one out at 100% saturation. And then, I should have checked this, but I want to say that if there's dumping involved, if we see dumping entries, we trigger it at, I believe, 85% saturation. But we also have the ability, if a customer comes to us and says, I want my first notice at 50%, we can do that. We can always configure your own account uniquely to you for that first notice. But the other thing is that don't wait icon we've got there. So we had a situation recently I just wanted to share with you. And by the way, Colleen and Patrice and I also know that we're mostly talking to customs brokers on this session. And we know that you're communicating with your customer and that you're kind of caught in the middle and you're giving them the best advice to proceed. And that ultimately they often have the decision as to how they want to proceed. But here's where it can bite you. We had a customer who had a, let's just say, $50,000 import bond. We triggered a notice that said, oh, you probably need a $60,000, if not higher bond. And the importer said, yes, I want to increase my bond. So this is before customs even issued a notice. Their bond was renewing within the next 2 months. And so they said, let's increase my bond at renewal. Right? So they terminated their bond and then wrote a bigger bond effective about 2 months out with the higher bond amount. Well, Customs Revenue Division analyzes sufficiency on continuous import bonds on a monthly basis. They generate those letters typically by the end of the first week of every month. And so they issued a letter for that importer's bond, even though we had a term date submitted and a new bigger bond increased. And that letter said you got to comply within the 30 days or so to increase that bond, or your bond will be rendered insufficient. We went to customs and said, look, we complied already, but it wasn't within their time frame. They would not allow us to rescind the termination. They would not allow us to change the termination date. That importer's bond was rendered insufficient for a couple of weeks, and they needed single transaction bonds in order to continue their importing. So don't wait. Yes, we love that importers want to comply and that they want to do it. Just do it now, basically, and don't wait.
Right. Yeah. I mean, that was definitely a lesson learned. Yes, you want to do it at renewal, but in some instances you just can't, right? Because of this situation. Customs will not. I mean, I know I went to the Office of Trade, and pleaded, for this importer to be able to use that existing bond until the new bond went into effect, right? And And then if there's somebody on monthly statement, it's even more aggravating because they can't be on monthly statement. It's based on a continuous bond. If you're filing singles, you can't be on a monthly statement. So even though a month, 2 months out is the renewal, it's best to do it right away. So work with us, your surety on the underwriting at that point rather than waiting months.
Hey, Colleen, we have a question from an attendee. When calculating the duty, taxes, and fees for 10%, how should we count countervailing duties?
Include that in there. It's all lawfully owed duties, so including countervailing and anti-dumping, the 301 tariffs, all of it, right? So any lawfully owed duty, tax, or fee paid upon entry.
10%. So even though the CVD is subject to whatever rates for or dumping, for the case number, it's still for the bond amount calculation, it's still 10%.
Correct. Now, I know we may be kind of going long on this particular slide, but one thing to note too, and I don't think we did put a slide in here about these are our reviewers, the analytical bond amount, where customs would include 100% of any supplemental duty bills that are open after a certain number of days, after 180 days. So that's when they include 100% of anything owed if there is a bill into that bond calculation.
And that's subjective, Colleen, right? I mean, we could say, hey, we know that there is open bills, but we cannot predict when customs is going to say that's enough of a substantial amount that we want the bond increased, right?
Well, it's based on the dates. So, and we'll talk about this a little bit later as far as the importance of meeting deadlines, right? So, if the bill is unprotested after it should have been protested 180 days, then that's when they're really going to start looking at that importer to ensure that they have a proper bond amount. What are they doing about those increased duty bills or supplemental duty bills? It can go either way. All right.
So we did get some stats from customs on single transaction bonds. So now we're flipping from continuous to singles. And we thought this was pretty interesting to share with you because we thought that when E-bond went into place back in January of 2015, when it was just as easy to file a continuous bond as it was a single, we thought that the counts would go down. And as you'll see there, both the importer broker line, the top line, as well as the ISF line at the bottom, activity code 16, they went up. So pretty interesting, surprising statistic to see.
Right, and I do know. I mean, I'm thinking back to 2 years ago, being in some Customs Surety Executive Committee meetings and asking about the total count of single transaction bond, and I know the Revenue Division always told us it was somewhere between. They didn't have an exact count because the Revenue Division at that time there was no E-bond. They didn't know what singles were filed in the ports, right? Because they were all filed in the ports. So they always said it was somewhere between 750,000 and 1 million for prior to E-bond. So that was early 2015 is when E-bond came into effect. So it did go down. And I think there was a huge number when ISF first came out, right? Because the ISF single, and then we kind of guided people to probably get a continuous bond for ISF because it makes more sense, right? To reduce the aggregate exposure for surety companies.
All right. So let's talk a little bit about the insufficiency process for single transaction bonds. What we've got here, our little icons, are basically to say that customs is conducting its sufficiency analysis. It appears to be daily, and they are sending out a letter to the bond principal or the importer they are emailing the letter to the customs broker, and they're also emailing it to the surety or the surety provider, such as Roanoke. So a few things that we wanted to point out here under the principle, we're also seeing, so customs issues this mandated increase on the single, and they get returned mail. And I've noticed that they're getting a little persnickety, saying, you know, this needs to be done, or we're going to avoid the importer number if the address is not updated. So I'm sure many of you have seen those emails before, where if the address is not corrected. So, and then of course, we just wanted to point out as well that if the bond amount needs to be increased, well, then of course, there's the result of potentially additional costs to the importer for that. That middle section under the customs broker. So just so that you're aware, customs is sending the email of the insufficiency notice to the broker and the surety in one email. And the email address for the broker is what you've got configured in your ACE portal. So just be aware of that. And then we just wanted to point out there's a compliance issue just for you customs brokers to be aware of about improper bond amount calculation. So I will say I typically am one of the people here at Roanoke. We have a couple of us who monitor our mailbox of the surety insufficiency notices, and the customs brokers are always responding timely. As a matter of fact, before I go on to that last section under the surety, I had a couple of stats I wanted to share with you of Roanoke's data. So I took a look at all of our our insufficiency letters from March 1st through the 25th of this month, and we had a total of 63 letters. And I'll tell you, first Colleen was like, wow, that's a lot. You know, like when you hear that number, like, oh, that's a whole bunch. But our average count of STBs per week for that time period is about, what did I say, 3,700. So it's 1.67% of those STBs got hit with an increased letter. So not so bad. You guys are doing pretty good, as a matter of fact. And on top of that, our process is because you guys handle these so well, we don't typically hop on them immediately. We see you responding to customs saying, yep, updated it, or we're checking our fast bond portal and seeing that you're updating the bond amount. And so we typically don't respond or act on the customs letter for about 2 or 3 days. If we don't see any response, then we will send the letter to our regional bond department to reach out to the customer to say, hey, what's going on? And in a lot of cases, they're on vacation. You know, there are valid reasons why they're not being handled immediately. But if I go back to that surety provider section on our slide here, the surety does have the right to deny a bond, an increased bond amount based on risk. And we've had that happen every once in a while where it's anti-dumping or whatever the reason is for the importer that the increased bond amount, we've had to say full collateral or no, unfortunately, for whatever reason. It's not often, like I could probably count on one hand how many times that may have happened, but that is possible, and we'll see customs again get a little persnickety and say this must be done. But we as the surety do not actually have to file or approve an increased bond amount. So just be aware of that.
And Jennifer, just to add to that, that's something that we battled with customs about prior to e-bond. You know, we had a year's worth of battle with customs to going back and forth in these meetings, and I'm sure many of you were involved in those meetings as part of the TSN and the e-bond subcommittee work that we've done. And they just came to the agreement, okay, you know, you're right, you don't have to, we can't force you to do anything. But alternatively, you know, we do work with our customs brokers on this issue, because you could have a compliance issue as a customs broker. You know, when we get to the next slide, we'll talk a little bit about informed compliance notices that we've seen because of insufficiencies. So always, you know, reach out to us if it's going to be a matter of your brokerage being receiving an informed compliance notice, certainly we will work with you to perhaps just write the bond, as a good client of ours, that we would do this and take on that risk just based on our mutual relationship.
Mhm. Yeah, and so then the last section on this slide, just point out, are the common insufficiency reasons. And of course, incorrect bond calculation. Every once in a while, we do see that change from entry type of a regular old consumption entry to a dumping entry. And then every once in a while, it's the PGA requirements, and the bond amount was just not, or the specific line item of the entry was not tripled, if it was FDA or whatever, for the bond amount calculation. Next slide.
And then we have the TIB insufficiencies. This is something fairly new. We've seen it over the past couple of years. It hasn't happened too often. I think it's happening more now than it was, where customs will require an additional single transaction bond on TIB entries that were originally transmitted for release on a continuous bond. Based on the regulations, the 10.31F, it does state in there that the bond securing a risk on a TIB entry cannot be less than double the duties, or 110% if it's professional equipment or tools of trade. So based on this, Customs is requiring that a sufficient bond would be 110% or 200% of that duty, and several of the centers and ports have been evaluating entry type 23s over the last few months. So let's say you have a TIB coming in, it's only a $50,000 continuous bond. The total duty, taxes, and fees on that TIB, had it been a consumption entry, was $30,000. So you're going to double that, you get $60,000. So Customs could look at it and see, wait a minute, double this duty is $60,000. This bond amount's only $50,000. We need an additional $10,000 single transaction bond to cover that risk, that revenue risk. So we've seen a few of these, like I said, over the past few months. Plus, we've seen some of our clients have received informed compliance notices from Customs. So again, we reach out to the Revenue Division and up to the Office of Trade and asked, okay, so how can Customs centers be sending out informed compliance notices when they haven't provided any information publicly on this requirement? So they are working on a CSMS message. I heard earlier this week, yes, they're working on it. So I'm not quite sure when that will be out. So look for that. If you do have an informed compliance notice regarding the wrong calculation on a TIB and an additional bond request, make sure you reach out to Customs and say, hey, wait a minute, this, yes, it's in the regulations, but it wasn't standard practice, right? Customs it's always been 10% of the duties, taxes, and fees for a continuous bond, and any entry is allowed on it. Any type of import entry is allowed on it. So it's just like it's different. So people need to know this, and Customs needs to inform the trade. The other thing we noticed on these things are it's months later sometimes, because Customs has 300 days to reject an entry, which is a little bit ridiculous in my opinion, but they do have up to 300 days. So you could make an entry in June of 21, and they could send you a notice today and say, hey, you need an additional bond to cover that risk because it wasn't big enough back then. So something to watch out for. And if we do see this notice come out, we will make sure that we blast it out to our clients, put it on our website, and available, LinkedIn, wherever, if we see this CSMS message. Working with a strong surety. So what should you do to look for what should you look for in a surety partner? We'll just go over just a couple of the essential characteristics that you might want to consider when determining the surety you work with. There's longevity and experience, which kind of relates to the financial strength of a surety company. Those that have been doing in this business as custom surety providers for many years have that experience, can underwrite based on that experience. Most insurance companies, surety companies, do reviews. They review their previous losses over many, many years and set your underwriting guidelines based on that loss history, right? It makes sense. That's why I think, everybody knows that anti-dumping or countervailing duty pretty much 100% of the time requires collateral, right? Just based on that loss history. Sound underwriting practices, ease of doing business. Are you a specialist in something, FDA, whatever? You can work with a surety that will allow you maybe a little bit higher authority levels if you are an expert in FDA. And again, looking at our loss history, we're able to do that. I think, Patrice, you were going to talk a little bit here too.
Yeah, I think a word that we've heard a lot more lately is capacity, and it's not just related to customs bonds. Really, I mean, it's the insurance world in general, and many surety companies don't just write surety bonds, or they don't just write customs bonds. Maybe they write contract bonds and insurance. So capacity is something that's affecting the insurance world today. So even though a surety company might have a T listing limit that's high, it's also what the underwriters of an insurance company are willing to put out there, right? So you want to work with an insurance company that is a larger insurance company that might have their risk diversified in different areas, so that they feel comfortable, having more capacity in one area or another, whether it's your insurance policy or whether it's your surety bonds. That does cost money to the insurance company. Insurance companies buy insurance for themselves, right? Reinsurance. And so those amounts of reinsurance also are increasing. So sometimes that reflects down upon on the surety bonds and also insurance policies.
And systems, right, Jennifer? Always, work with a surety that has ease of doing business, right?
Right. I mean, not only do we have fast bond, but a lot of sureties now are able to connect with your software vendor for issuing your single transaction bonds. So you don't even have to log into the sureties portal to issue your singles. So that's a great feature as well. Yeah, and I know we've talked about capacity and ease of doing business and stuff, but I want to sit here and put on my broker hat and ask you both, why should the broker care about losses? And or if a surety company is not financially strong enough, how does that impact them?
You want to go, Patrice, or you want me to?
We could both. I mean, we could shoot. I think there's a couple different things. Not just being able to write a bond for an importer, and I know that most customs brokers, again, if you've been doing this for a long time, may have been through a rollover, either changing surety companies within your same broker or changing brokers. But the other issue is it also affects either the pricing of your bond, how large of a bond you're able to write without having underwriting issues or underwriting concerns. There's different things. If you have an importer that has losses on their bond, that can affect your losses with a surety company that will either specifically make your rates increase, or a surety company may no longer want to do business with you, and then another surety company may not want to if you become sort of that broker that's consistently issuing bonds for importers that have bad losses. Colleen, is there other things you want to add to that?
No, I would have said the same. I would think that, even though we want collateral in some instances, that's actually good for you to know, right? If we say, oh, you know what, we're a little bit concerned. I mean, it could be just a regular, $50,000 bond that's renewed a few times, and there's, some concern about, the entry's not liquidating, or obviously anti-dumping, that's a different matter, but we could have some underwriting concerns. And you should take that to heart as a customs broker, because if we have concerns about the financial wherewithal of an importer, you probably would have some concerns too, right? Are you going to be paid your fees? Are you fronting duties for these importers, and will you get reimbursed? You know, so those are some things you may think, oh wow, the surety wants collateral again, or oh, they're being too tough on this one. It's one of my best accounts. But you know, really kind of take that to heart to think about your business, right? If we see there could be an issue and have financial concerns, then you should be a little concerned also.
Yeah, Colleen, and we do have somebody who submitted in our chat, you know, underwriting concerns are evaluated by the underwriter, and the surety will notify the broker of the issues. And that's absolutely true. Our underwriters are looking at the data we get from customs on our surety bonds. We get entry data and claims data on the customs bonds where it's our surety code. So we don't see other sureties' data. But yeah, they do look at that data, and occasionally we'll get, you know, a customs broker who works with the importer, and the importer swears there's no dumping, and then, as we know, importers can use multiple brokers, and occasionally our underwriters will see these entries come in that are dumping by another broker. So you're absolutely right. We will be notifying the broker of record on that bond to say, hey, now we need information, and let's underwrite this properly to make sure that the surety doesn't have the losses. Because don't forget, like Patrice said at the beginning of this presentation, the customs bond guarantees that the importer is going to pay customs and follow all of the rules and regulations. And if they don't, the bond states that the surety has to. And so because of that, the surety is going to go and ask for reimbursement if we ever pay any claims out. So we're looking to not make any losses whatsoever, which I know I'm really dumbing things down there, but just to share that. But also on the flip side of this comment is that also we love when our brokers come to us and say, we think we believe there are some changes. We talked to the importer and they're planning on A, B, and C. We love that. That allows us to get ahead of issues and to work with the underwriter and come up with the best underwriting response that we can give you.
Sure. If you see you know that the importer isn't going to pay, you know, the monthly duties, and you have to take them off statement. That's very important for us to know, right? As your surety provider, to protect the surety company. By protecting the surety company, it's a benefit to customs brokers, because then, you know, we can have the underwriting we have today. We can, you know, keep the rates where they should be. So all in all, you know, underwriting is good. You know, it's not always bad. You know, it helps you to provide the best service for your clients.
So before we move on, just to show that whole right side of that slide were the 3 sureties that Roanoke works with. So just to show you, they're financially sound surety companies. So if you're working with Roanoke, you've got really good sound surety companies. And Colleen, we did switch for those customs brokers of clients of ours that have been with us, you know, at least 10 years or more. We did have a rollover back in 2011, 2012, but that was our choice, right?
Yes, it was a business decision at the time. I mean, there was an acquisition in Munich Re, which you can see there. Munich Reinsurance America is a related company. For years, I started actually in 1988 with Washington International Insurance Company when Washington was owned by Roanoke that many years ago. And Jennifer worked for Washington International also. Patrice has always been one of those Roanoke gals, but for many years, all of us. Yes, that was a business decision. It wasn't because Washington wanted to. Actually, we should have Washington International listed here too, because we do use Washington. We still have a great relationship, you know, Actually, we still have open entries on Washington International bonds back, 10, 12, 15 years ago. As you know, because of the tail on entries and issues of anti-dumping and such. So yes, in fact, I just got an email from somebody from Washington this morning to talk about a couple bonds. So we still have that very friendly relationship.
Okay, I think we spoke enough about that, right? So let's move on and let's talk about compliance awareness. So we've got a couple of slides here just to bring to your attention. So let's talk a little bit about the importance of meeting deadlines. Colleen or Patrice?
I can start this one out as far as post-summary corrections and protests. It's imperative to never miss those deadlines, right? For PSCs, you have 300 days after entry or 15 days prior to liquidation to file a post-summary correction. If you don't and you're time barred, that could mean that your importer client will not be able to receive a refund if there would have been a change in that duty, right? For protests, it's 180 days for the importer, and then around between 45 and 60 days is when the time clock for the surety starts. It kind of staggers, overlaps a bit there. But if you don't file a protest within 180 days, those bills are due, right? And a demand on surety is made, and then that's a huge red flag to a surety company when underwriting is concerned. Patrice, you want me to just finish this up here with liquidated damages? Same thing, it's 60 days an importer has, and then after that time is done, then the surety company gets 60 days to petition. You petition a liquidated damage claim. Again, supplemental duty bills, increased duty bills, that's that protest period. Anything to add, ladies?
No.
Here I am again with my statistics. I'm kind of that nerd. So we have here, speaking of liquidated damages, right? Patrice said early on when we first started that the bond covers, revenue related, admissibility related, and liquidated damage claims. So if you look at this, the number of audits has really gone up. Now, an audit's an audit, right? You're going to find, they'll find additional duties that could be owed as a result of their audits. If you look at this in 2018, again, the completed audits are about the same number, but look at the amounts here. I mean, this really goes to those 301 duties too. This increase here, customs could audit an importer and find that they didn't pay the correct amount. There was 301 duties owed. So there was this big increase of collections as a result of audits. You're looking here too at these liquidated damages. Look at what happened here. It was back in 2018, it was 9,200 liquidated damage claims. That's a 5955As that were issued. Went up to 21,000 the following year, and it's been pretty stagnant since, so 19,000. So I can tell you that our claims people are very busy within Roanoke. The amount they've collected has gone from 15, it doubled here in 19, and it's been over 20 million in trade-related liquidated damages and penalties. The bond doesn't really cover penalties per se, but it does cover liquidated damages. So that's a lot of claims that come in. Same thing with supplemental duty bills. Now, I don't have a number of total bills that have been issued. This is Roanoke data. So if you look at this, the number of bills have increased too. The supplemental duty bills, you're looking at less than 20,000 in 2017, and we're up about almost 27,000 bills, around 28,000 bills that were issued in 2021. So those have increased too. What I can tell you is that the total amount for all of these almost 30,000 bills doubled what was in 2017, the face amount of those bills. And I can tell you it's in the hundreds of millions of dollars. ACH payments. Look at how ACH is a bounced, a debit voucher is a bounced ACH payment. So they failed to pay their monthly statement or a daily statement when it was due, right? So we looked at, there were almost 1,600 of these bounce payments back in 2020, resulting from the pandemic primarily, right? But it hasn't really gone down that much. It's, still up at 1,200 in 21, and the amount in 2020 was 14 times the total amount in 2017, and in 21 it was 9 times.
Yeah, so Colleen, on this slide, just to be clear, so the numbers on the vertical axis, those are counts, those are not amounts, right?
Correct. Total number of bounced ACH payments that we saw. This is just on Roanoke data. It kind of gives you a perspective of, oh, yeah, there are a lot of claims on these bonds, right? So. And then this slide is very telling also. So if you look at these colors here, back in 2019, anti-dumping and countervailing duty was the highest loss category we had. This is just Roanoke data in 2019, right? Estimated duty was just 14, and that estimated duty piece of the pie includes debit vouchers, which we just showed you those counts. It was only 14%. Move on to 2020, 31% of our total losses were a result of non-payment of estimated duty. And anti-dumping went down to 20%. And then last year in 21, it was 37% non-payment of estimated duty versus 23% anti-dumping. So there was that shift. It was duties due immediately versus those anti-dumping or countervailing duties due, years later, that are found to be due years later. And that was a result of the economic factors resulting around the pandemic. The total losses, like this whole pie, was in 2021 was higher than in any year since the Great Recession years of 2008 and 2009. So we've seen higher losses than in the last, 12 years? 15 years?
So we're coming close to the end. We're just going to go over a couple different insurance policies that are not necessarily related to your importers, but in a way for you to protect yourself and to protect your business as a customs broker or freight forwarder. So what happens when deadlines are missed? There are many consequences to missing a deadline or making a mistake. And this is something we were even taught as kids, right? However, in our industry, the importance of having an insurance policy to protect these errors is growing more and more each year. Part of that is due to the increase in freight charges, demurrage or per diem. And the other part is just that we're in a complicated industry that continues to push all of us to be an expert at what we do more and more each year, right? So errors and omissions insurance with first dollar defense is something that is very important for any customs broker or freight forwarder to have. One of the most common claims that we have seen year after year is due to improper classification and increased duty bills that include anti-dumping and countervailing duty entries. But another more recent issue has to do with claims involving PSCs and protests of 301 duties that we had talked about before. If you miss these deadlines or you fail to keep documented emails of requesting information or draft copies of the PSC or protest, we've seen many importers sue the customs broker for these types of mistakes. While you may not always be at fault, it's important to have that first dollar defense coverage with your E&O policy, because that coverage covers legal costs and defense costs, which can obviously add up very quickly. It's also very important to not just say we're working on it, but to document everything going back and forth. As the freight charges are rising, the dollar amounts are becoming certainly more worthy of the importer fighting about it or making a claim against you. And just as I stated before, while you may not always be at fault for an E&O claim to be covered, having that defense coverage can also help mitigate your financial losses in these cases. Our Roanoke errors and omissions policy has specifically been tailored to the transportation industry, and it does include this first dollar defense coverage. Because this type of policy, meaning errors and omissions, is also used by doctors, attorneys, accountants, really any professional that has the risk of suffering a financial loss due to an error or mistake they made, it's important to make sure you are working with an insurance company like Roanoke who understands the risks and needs to the transportation industry, not just the insurance product overall. It's also important for you to review your terms and conditions and be aware of what you are agreeing to be liable for and what you're limiting your liability to. Recently, we've seen importers asking brokers to increase some of those dollar amounts that they're limiting their liability to on the terms and conditions. If you're asked to do that and you make that business decision, make sure that if you have an errors and omissions policy, you're also reporting that to your insurance company, because those things do need to be reviewed as well. The other thing that I think we continue to get asked lately is working from home. A lot of people are still working from home or in a hybrid situation. Is that causing more claims on errors and omissions? And I don't think we can easily say that it is. I don't necessarily see any trends that are related to working from home. I think it goes back to that increased demand for not only your expertise, but also the increased charges for importing anything into the United States right now.
Yeah, and one thing to point out on the claims involving PSCs and protests and meeting those deadlines, I'm sure everybody saw that there was the reinstatement of exclusions for some of the products for 301. That goes back retroactive back to October 12th, 21. So I don't know, I haven't seen, I've been looking for it, if Customs actually put out guidance for the trade on this, but October 12th was what, about six-ish months ago. So PSCs will have to be done. It's probably unlikely that any of those have liquidated yet. So you would have to do a protest. But just keep in mind, with that reinstatement, that you want to take a look at those entries to see if you should be filing PSCs for your clients.
So now we move on to cyber risks and insurance, right? I mean, and this is something I'm sure that you've all heard people speaking about lately. And I mean, it's even in the news on a daily basis. Cyber risks are growing every day, and the need for cyber insurance is becoming more prevalent than ever before. It's no longer, I'm sure we've all received those text messages asking you to save someone from jail, right? Or an obvious email telling you just won $1 million, give us your social security number. And I think we all know not to do that. But cyber criminals have certainly gotten more sophisticated in hacking your systems. As many of you have seen recently, these hacks have shut down large companies, even within our industry, for long periods of time, as well as forced many companies to suffer financial losses, either from changing bank account numbers on invoices that you're paying a vendor or maybe a customer owes you. It's very important to not only purchase a robust cyber policy now, but also review the types of coverages that are within that policy, because they can be different. You also want to look at including training and systems evaluations. We have a specific policy at Roanoke, which is our cyber suite policy, that provides all three of those, including a report card that we can give to you of your system evaluation. So you can see the holes that maybe you can work with an IT company or your own IT department to figure out how to fix those things. If you don't have this insurance now, it's definitely something you need to put in your risk assessment program and budget for it way sooner than later. I think we're on to our last slide, right?
There we go. Yeah, so the last thing we just wanted to share with you before we go into our Q&A session is, a lot of you have probably already seen this or have heard this, but just in case you haven't, last year we opened up an office in Toronto, Canada. It's being led by Glenn Patton. He's moved up to Toronto, and we are offering all of our insurance and surety bond solutions up in Canada as well. So now we're talking Canada customs bonds. We can expand our offering on those as well as our insurance product lines. But Colleen, do you want to talk a little bit about the CBSA, Canada Border Security Agency? Is that the acronym?
Services Agency.
Services, thank you.
So I apologize. the landscapers are outside of our office building and it's really loud. Hopefully you can't hear that, but so hopefully you can't hear it. The Customs in Canada is moving towards an importer-based bonding system, very much like the US standard for customs bonds. Like Patrice said, that the US customs bonding system is held out to the world as the gold standard. So Canada recognizes how great we are here in the US, right? So they're moving towards this importer-based system. The bond amount calculation is a little bit different than in the US, but they are moving towards it. It was initially supposed to go live this May with their CARM program, where a revenue monthly payment of revenue by the importers, but it's been now delayed because it is a very paper-based process. We have been on a few calls with them on an electronic, hopefully, process up in Canada. We know how to do it here in the US. We've done e-bonds, so we're providing as much advice as we can to the Surety Association as well as Customs in Canada. So we're moving towards that. We do believe that it's January now, January of 2023, when this requirement will go into effect. So there's not a whole lot of time to plan with Customs on an electronic system. So maybe in the meantime, they'll still have to have paper, but hopefully they'll allow for a facsimile signature on these bonds, because today they want wet signatures. No, we're going way back in time for wet signatures, right? So hopefully we can get them to come around on some of these matters before moving towards this system. I think that's all we have today.
Yeah, so I just wanted to thank everybody. Now is the time to submit your questions in the Q&A section of the WebEx software. I know we ran a little long. We're always very passionate about what we have to share with you. So if you submit a question and we don't get to the answer, we will of course reach out to you directly to get you your answer. And I just want to remind everybody that when you exit out of the WebEx software, please do submit or complete the survey. We really appreciate it. We personally read your comments and your feedback along with others at Roanoke. And when you complete that survey, your name will automatically be entered into a drawing where we will be giving away 2 $50 Visa gift cards. So go ahead and submit any questions you have. And while we're waiting for that, I do have one question for you, Patrice. So we talked about cyber towards the end, and I saw the little note about invoice manipulation. Can you talk about that? I think you've got a scary example for people to be aware of.
Yeah, unfortunately, we have several scary examples of that lately, but something that we have seen has to do with, a customer, the customs broker sent an invoice to their customer for payment of services that they provided, and somewhere along the line their system was hacked and someone was able to take that email, make it look like it's coming from the customs broker, take the invoice, put the logo, change the bank account number, and to the importer, or that got the invoice, it looked normal. I mean, the email address was slightly off. I mean, if you had been looking at that, which is something we certainly suggest you do every single time you open something, but really everything else about it looked like it had come from the customs broker. Unfortunately, the importer paid that to this wrong bank account, and it was over $50,000. And so that's something that, there is in some certain cyber policies, invoice manipulation coverage that can protect you, because the importers don't always have cyber coverage. And it did turn out that the system that was hacked was actually the importers. So they didn't have coverage. So at this stage, the customs broker is just unfortunately sitting out with $50,000. There are things you could do, but the relationship they had with the importer, they didn't feel it was a business decision they wanted to make to continue to force them to pay that money to them.
Great, thank you. We are getting some questions in, so I'm going to hit a couple of these. We will we'll run a couple minutes longer just to address as many as we can here. The first one I want to knock out is, will a recording be available? And yes, so within the next couple of days, we will be emailing all of you the recording and the slides so that you can have access to that. I'd like to also answer some of these questions we have about bond amount calculation and sufficiency. So real quick, here's a quick one. For sufficiency calculation, when Customs looks back the 12 months, do they use entry summary date, entry date, or release date? The answer is summary.
Yes.
They use the summary date. Also, same person asked another question about bond calculation. Colleen, this one is for you. The bond limit is 10% duties, taxes, and fees for 12 months, plus 100% open bills if bills are not paid after a number of days, right? And it's a two-part question. I heard if there are entries not liquidated, type 3, for example, 10% duties, taxes, and fees of those entries, even though they're older than 12 months, are also added when Customs reviews the sufficiency. Is that true?
No, that's not true. It's true that 100% of any increased duty or supplemental duty bills that are outstanding after, I think it's 90 days, or I'd have to look at the calculation. They don't happen very often, but there is a factor when they're doing the analytical review that adds in any outstanding debt, right? Liquidated duties increases. They do not go back, even though there's extensions and suspensions on 03 entry types, your anti-dumping or countervailing, they're not going to go back further than 12 months. It's just 12 months back when they're looking at the pure total duties, taxes and fees on the duty amounts paid.
Okay. Here's a sufficiency bond amount calculation, Colleen. I'm gonna ask this one of you too. I was always of the understanding that STBs were 3 times the value of the goods if there was a PGA to be determined. I recently saw 3 times the value plus the entry duties. Can you confirm?
It's 3 times the value according to the bond amount guidelines. So,
okay, so let's complicate this though. Let's say you got an entry summary that's got multiple line items.
Okay.
And line item 1 is not subject to any PGAs, and line item 2 is. So do you triple the whole shebang or just that one line item?
Is the line item subject to PGA?
So then you will have some duties then, most likely, right? Assuming that first transaction had duties and was not duty-free.
Oh, of course, there's could be duties, but according to the 3510, right, the old, which by the way, Customs is working on updating that and has been working on updating that for many years. The guidelines for setting bond amounts, it's 3 times the value for PGA.
Okay. Colleen, you're in the hot seat. I've got another question for you. This one's on claims, which is why I'm sending it over your way. A recurring issue I've noticed now working with an importer after 28 years with a broker is the notices of liquidated damages, the 5955A. Whoops. Rats, I lost, there we go. CBP has a tendency to send them only to the broker, at which point the clock is ticking. Is Roanoke provided with the LD notices at the same time as the broker as well? As the importer of record, we are sometimes brought in at the tail end of the date range and are left scrambling to provide the needed information for CBP. There's a lot there, right, that we can address.
Yes. And in fact, we are working with Customs, and this is with the Customs brokers and surety companies. And in fact, we had a meeting last week on CCATS, right? So CCATS is the system that generates the liquidated damage claims. Number one, surety companies get a hard copy by mail of the 5955A. but sometimes it's not very timely, right? Because they're coming from different ports. However, we do get what's called the automated surety interface data. In that data includes fines, penalties, and forfeitures, or liquidated damage claim data, which comes in once a week, either on Tuesdays or Fridays, one of the two for liquidated damages. So we do get that electronic information. It doesn't include, the whole, middle section of the 5955A with, the exact, violation and infraction information on it, but it is something. And we provide these reports are available to our customs broker clients through our fast bond program. There's management reports that they can pull to get all claims for all of their importers for which they sell the bond or provide the bond to their importer clients. We know that importers, if you have a portal, I know a lot of importers do not have an ACE portal. We did submit, I think it's through the 21st Century Customs Framework, as well as AAEI, the American Association of Exporters and Importers. We have sent letters and notices to Customs saying, hey, these really need to be emailed, uploaded in the importer's portal because of the time it takes for these things to get through the mail. So I hope that answered the question. If not,
Well,
please just email us.
Yeah, we do have a few more questions, but what we're going to do is now that we're a few minutes after, we will reach out to you directly. We've got your contact information, so we will be contacting you directly. But as I mentioned, we will be sending out a recording of this webinar and the slides within the next couple of days. Don't forget to fill out that survey when you close out, and we really appreciate your time and attendance today. Thank you, everyone.
Thank you. Have a good day.
Thank you. Bye.